This week, you will likely see a number of announcements. You may very well see Donald Trump say that he wants to launch a digital currency reserve because the U.S. needs to hold a similar amount of Bitcoin relative to the market cap of Bitcoin as it holds gold. The U.S. is the largest holder of gold in the world. 50 million voters have a perspective on Bitcoin that's positive. That is a large voting bloc.
We're speaking now with Fred Thiel. He is a CEO of Marathon Digital, and we're be talking about his outlook on Bitcoin, the current environment for Bitcoin, and why Marathon recently purchased more Bitcoins. Welcome back to the show, Fred.
Great to be here.
Marathon Digital Holdings, ticker MARA, recently purchased $100 million worth of Bitcoin. Now, the first question I have is why, right? The company mines Bitcoins. We can talk about your mining strategy just a bit, but if you're already mining Bitcoins, why did you just purchase more Bitcoins?
So not only do we mine Bitcoin, but we mine things like Caspa. And if you think about 1 kilowatt hour of energy results in about 8 cents of Bitcoin revenues. And 1 kilowatt hour of energy results in about $1 of Caspa. And so I can take Caspa and sell it and buy Bitcoin. And so I'm essentially lowering my cost to buy Bitcoin. Amongst other things, you have to look at your average weighted cost of capital and what is your strategic treasury asset, right? And so as a Bitcoin miner, you would think it logical that I would want to keep my treasury assets in Bitcoin. And we typically will have $100 million in cash, but at times we'll have $200, $300, or more $100 million in cash. And anybody who's in the Bitcoin industry knows, of course, that with inflation, if you're keeping money in fiat, it's losing value, whereas Bitcoin on average generates at least a 50% return annually. And this isn't the first time we've gone in and done strategic buys. In 2021, in January, we bought $150 million of Bitcoin when it was in the teens, low teens. Here we are, and it's obviously trading in the 60,000 range. We had the advantage that we started accumulating this $100 million over the past few weeks when Bitcoin had various dips. And so we were able to take advantage of opportunistic pricing in the marketplace. And holding Bitcoin on our balance sheet has a number of benefits. For one thing, as Bitcoin appreciates in value, our balance sheet increases and gets stronger and stronger. This week, you will likely see a number of announcements. Michael Saylor today at the conference spoke at length about holding Bitcoin as a strategic treasury reserve asset for not just companies, but also countries. You may very well see Donald Trump say that he wants to launch a digital currency reserve because the U.S. needs to hold a similar amount of Bitcoin relative to the market cap of Bitcoin as it holds gold. The U.S. is the largest holder of gold in the world. And you project power through the assets you have on your balance sheet and through reserves, right? As a company, you want to make sure you're holding your cash, your liquid assets, in a way that generates the best return for your shareholders. And if you can put it in something that generates a 50% annual return, that's pretty attractive when you think that the alternative is treasuries, because as corporations, we can't hold our treasury assets in securities easily, especially when they start becoming a larger and larger portion of the enterprise value of the company, because then all of a sudden you become a financial institution and you fall under other regulations. So it's very important as a company that you're able to store your assets in something that will appreciate and generate a great return for your shareholders.
Yeah, you are speaking to us from the Bitcoin Nashville conference. So thank you for tuning in while you're attending the conference. I appreciate it. What's the sentiment there right now in regards to Bitcoin? Last year I attended. I have to say, it was relatively dead. There were very few people in attendance last year relative to the year before. And I don't know how it is this year. I'm not there.
Well, let's see. We have Donald Trump coming. We have RFK here today. We have a whole plethora of senators and members of the House of Representatives. And we have a number of members of the leaders of the Democratic Party here. There's no reason for any of them to be here other than the fact that they want to talk to people in this industry and they want to talk to Bitcoiners. Donald Trump and the Republican Party have made Bitcoin part of their national platform. They've made Bitcoin mining part of their national platform. The Democrats are starting to look at this. Think about the legislative branch and the recent votes that have been held on SAB 121. was a bipartisan vote where even Chuck Schumer voted against his own president on a bill. So this is becoming an issue that is very important for voters. And I think what you'll find is the Democrats under President Biden, with Senator Warren kind of leading for crypto army, attacked crypto and thought that there would be no price to pay because it's such a small group of people that are involved in crypto. But it's 50 million voters and has had an impact. And so now all of a sudden you're seeing both parties looking to attract those voters to their causes. You know, Bitcoin is not just a great financial asset. It's also a point for voters under the age of 40, something they view as important. And they want to have access to it and they want to be able to use it and trade it freely and not have it be banned or have access to banking be eliminated for companies involved in Bitcoin, et cetera.
Before we continue with the interview, I want to tell you about another way you can invest your Bitcoins and store them safely instead of using a traditional wallet or an exchange. Consider an IRA. Today's sponsor, iTrust Capital, is one such IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1% only. And being an IRA, it also offers unique tax benefits. If you'd like to get started and learn more, click on itrust.capital/David in the link down below or scan the QR code up here. If you're over 18 and you want to open a new account with cash or roll over an existing account, you can do so using my referral link. And if you use that referral link, you'll get $100 in signing bonuses. I just spoke to an economist on the issue of Donald Trump potentially announcing a Bitcoin strategic reserve. Hasn't officially happened yet, but there's a lot of rumors, like like you just pointed out. Mm-hmm. And his retort, his, I guess, criticism of this policy is that why would you want, as a nation, why would you want a, in his words, volatile asset with no inherent or intrinsic value to be a strategic reserve asset? Any sort of backing. I mean, that's what El Salvador did. And by the way, they incurred losses when Bitcoin went down. So why would you want that? How would you respond to this?
So here's the interesting thing. You can mine all the gold you want on this planet. So no matter how much gold you have on your balance sheet, somebody's going to keep mining it. You can't control that market. The foreign nations who have essentially been banned from the dollar environment because of sanctions are looking for a vehicle to transact and do business that is outside of the control of the US dollar and the US government. Bitcoin is one of those. If Russia, China, India, Saudi Arabia, and the countries that want to trade commodities, because remember, the petrodollar deal is dead. Those commodities no longer have to be priced in dollars. If they want to start moving to holding their reserve assets in Bitcoin, there's nothing the US can do to stop them transacting. There's nothing the US can do to confiscate it unless it's held in a US financial institution. And so the US, to project power in the Bitcoin network, in the Bitcoin world, needs to own Bitcoin. Bitcoin is one of the top 8 assets in the world, right? Look at art. I'll give you an example. Talk to an economist. What intrinsic value does owning a Picasso have? It only has value because people attribute value to it and think it's valuable. But his art could go out of favor and it would have no value. It's a piece of canvas with some ink on it. So I think it's very important for people to realize that Bitcoin is not a fly-by-night thing. It's held by millions of people. Its market cap is in the trillions of dollars. The Bitcoin ETFs are proof. It's the fastest and most successful ETF launch ever. Look at the amount of flows that go into these things. You have pension funds like the State of Wisconsin Investment Board that hold hundreds of millions of dollars in Bitcoin and Bitcoin investments. Why would these types of asset managers be interested in holding Bitcoin? It's because it generates a great yield. Show me any asset that has performed this well over the past 10 years. None.
To the point about the petrodollar agreement, yeah, it was debatable whether or not there was an official agreement in place in the first place. But to your broader point, yes, you're right. A lot of people are looking for alternatives to trade with something besides the dollar. Is Bitcoin going to be this alternative, you think?
I don't think it's necessarily going to be the currency of exchange, but it will definitely be a reserve asset where people store their money. I don't think the Saudis want to hold a bunch of rubles, renminbi, and rupees, right? There's a reason they hold dollars. It's because rule of law, it's stable, and it's safe. Well, the problem is they've been funding the US deficit. And at over $35 trillion, servicing that deficit, that debt, rather, has now gotten to the point where it's larger than a lot of entitlement spending. And if the US were to hold 2 million Bitcoin, 10% of the Bitcoin, of all the Bitcoin in the world, and Bitcoin were to climb into the millions of dollars, you now have trillions of dollars in your reserve that you could use to pay off parts of the deficit or even all the deficit. There isn't another way for the US to deal with the deficit other than allowing inflation to run rampant and letting the dollar become devalued.
I think the timing of your purchase is up for well, people have been questioning why now. Was this a decision that you came to with the board over a long period of time, or was it just because you felt the price is right now, so to speak?
We think we're at the beginning of an inflection point in Bitcoin from an adoption perspective. The Bitcoin ETFs were the beginning of the potential for institutionalization of Bitcoin as an investment asset. It made it easy for any asset manager to hold Bitcoin just like they could hold the stock in any company. And as soon as the wirehouses finalized compliance, because to this date, the vast majority of people who've invested in these ETFs are retail investors. As soon as the wirehouses finish compliance and various pension funds finish their compliance, you're going to see a large volume of retirement assets go into Bitcoin denominated assets, whether it's ETFs, whether it's equities of Bitcoin companies like ours or MicroStrategy. There are lots of ways to get exposure to it. You know, there's 40 plus trillion dollars of pension assets, and 1 or 2% of those going into Bitcoin will have a huge impact. Remember, it is a finite asset. It's not like buying stock in IBM or Tesla who can just issue more stock. It's not like gold where you can just mine more gold.
I think one of the concerns around the Bitcoin ETFs is, let's suppose it grows even bigger beyond what it's already been achieved, or what has already been achieved. By the way, it's been like the most successful ETF launch in history by volume of transactions. But the question is, suppose it gets bigger, wouldn't Bitcoins be taken out of circulation to be used in these ETFs and derivative products, thereby making it less likely to be used as a medium of exchange?
Well, I don't think you have to look at Bitcoin from multiple angles. One is as an investment asset, right? Picassos are not a medium of exchange. They're something people have invested in, right? And there are only so many Picassos available on the market today, right? If you want to buy Banksy, you have to find somebody willing to sell a Banksy, unless he paints one for you. So it's the same thing with Bitcoin. If the ETFs end up soaking up a large percentage of Bitcoin, and other sovereign nations start soaking up a large volume of Bitcoin, yeah, there won't be a lot available. But what will that do to the price of Bitcoin? It will go through the roof. Because again, there are only 21 million Bitcoin. And of that 21 million, 19.8 are arguably already in circulation.
Based on your interactions with people at the conference, what's the sentiment on the price right now? It's been hovering around $60,000 to $75,000 for a couple of months now, range bound. Is it well? It has been consolidating. People have been likening this to the $20,000 period from a few years ago before it bounced up much higher, or it could go down. I mean, it really depends on what the sentiment is. What are you hearing?
I don't think politicians would be speaking to the Bitcoin audience about wanting to do reserve currencies, wanting to do promoting Bitcoin mining as a strategic initiative in the country, and wanting to view how regulation can be made better around these assets. If there wasn't demand from institutional investors for it, and if there wasn't demand for people for it. And so the sentiment is very bullish. You know, you have a lot of people feeling this is like the early stages of 2021. But the difference is you now have a regulated financial instrument that anybody can acquire to hold Bitcoin that doesn't require you to open a wallet. It doesn't require you to hold keys. It doesn't require you to actually hold it or transfer it. You call your broker, you buy shares in an ETF, and you're done. It's that simple.
But speaking of politicians, yeah, we didn't have this amount of interest from senior level management in the government a few years ago, even 2 years ago. I remember when I attended the conference. What changed in the
Well,
last couple of years?
the Biden administration ceded financial policy to Senator Warren and her group of people who felt that attacking crypto because of the FTX issues was something that would cost the Democrats nothing and allow them to really control an industry and squash an industry, just like they tried to do by controlling banking for the cannabis industry or for other industries. They went after the on-ramps and off-ramps to crypto. They went after the companies that were involved in crypto. The SEC went out and filed lawsuits. They tried to do everything they could to kill it over the past 3 years. Right? Now you have a different tenor in their tone.
Is it
And
because popular sentiment towards Bitcoins and cryptos have been shifting as well?
50 million voters have a perspective on Bitcoin that's positive. That is a large voting bloc. There are 6 states that determine the election in this country. You got to do what you can to get voters, and it is an issue.
What do you think? It doesn't matter, regardless of a Democrat or Republican win. How do you think crypto policies will evolve by January 2025?
Well, I don't think policies will be implemented by January of 2025, but the Trump and the Republican Party have clearly stated their policy regarding Bitcoin. And that is that they're very positively inclined to it, and they're going to do stuff to essentially make sure there's fair and good regulation for it. And these discussions about building a strategic reserve in Bitcoin only go to show the bullishness of that group for the asset. And, we'll see what the Democratic side, Harris hasn't laid out a platform yet. She's traditionally tended to be more progressive than Biden. It looks like the Warren crypto army has been neutered, at least at this point, within the White House. And we'll have to see what comes out of it from the Democratic side. But the fact that there are a lot of people, a lot of leaders within the Democratic Party that are here at this conference says to me they're obviously very interested in engaging in conversations to learn more and figure out how they should engage over it.
Trump also said on the campaign trail that he wants all Bitcoin mining to be done in the U.S. How do you interpret that statement?
Well, it's of strategic importance because the Bitcoin mining is transaction processing, essentially. And if transactions are processed outside of the U.S., then the U.S. has no way to control what transactions are being processed. So Trump would ideally love to see the majority of Bitcoin mining done in the U.S. because that way the majority of Bitcoin transactions would, in theory, be able to fall under some form of U.S. regulation. If other countries have the majority of Bitcoin mining, then there's no way for the U.S. to control Bitcoin, period.
But concretely, what can the government do to incentivize more mining to be done here in the U.S.?
They could do tax incentives. They could create energy incentives for Bitcoin miners to establish here. Remember, Bitcoin miners are economic entities that are focused on procuring energy at the lowest cost and operating in environments where there's good rule of law and stable regulation. You have stable regulation with good rule of law. You have incentives around tax and you have incentives around energy, and you would find Bitcoin miners flocking to the U.S.
You were on the show a few months ago, and I asked you about the your prediction for the Bitcoin price post-halving. You are correctly called for the Bitcoin price to trend a little bit higher. I mean, it wouldn't explode, but it would continue trending higher post-halving. This was early March. It's broadly moved in line with your projections. It's gone a little bit higher since early March. More or less range bound. We talked about Bitcoin, but going up post-halving, has that had any impact on Ethereum at all? The Ethereum and Bitcoin prices have been diverging.
Well, I think the challenge for Ethereum is there was some pent-up demand with expectations around the Ethereum ETFs launching, which have now officially launched. It's too early to tell how successful that launch will be. But the fact of the matter is that when you look at an asset of institutional quality, Ethereum doesn't fill that bill. And so you don't see countries talking about building a reserve in Ethereum because Ethereum operates under totally different systems. There are entities that control Ethereum. That's not the case in in the world of Bitcoin. Nobody controls Bitcoin, right? There isn't an entity, there isn't a foundation that decides what goes into Bitcoin code, what doesn't go into Bitcoin code. It's all of the miners and all the node operators. Ethereum is essentially controlled by the foundation and what Vitalik Buterin wants to do. And it's also controlled by the stake operators, the stakers. And there's a huge concentration of that today.
One of your reasons for why the Bitcoin price could trend a little bit higher post halving is due to the fact that the mining costs could go higher. Is that something you've observed? It's been a couple months now post halving. Can you evaluate the state of mining costs?
Yeah, well, mining costs essentially doubled from a perspective that you need to use twice as much energy to mine the same amount of Bitcoin now because the rewards have been halved, right? We went through this in 2023, not through a halving, but rather through simply growth in the network. As more miners are applied to the network, it becomes more difficult because the amount of Bitcoin that's made available on a daily basis through block rewards and block subsidies is fixed. And so hash rate has continued to grow and continues to grow now, and it continues to get more and more difficult to mine Bitcoin, i.e. the cost to mine Bitcoin continues to go up. Making miners be forced to be more efficient. You also have seen miners do substantial upgrades to the fleets that they have, that they're operating with much more energy efficient machines. And what that means is that you can increase your compute power for the same power draw by replacing older machines that are less efficient, new machines that are more efficient. And so without having to draw more energy, you all of a sudden have much more compute power. And that's one of the great benefits of Bitcoin is there's a huge incentive for miners to operate more and more efficiently every day.
One of the speculations before the halving happened was that the mining cost would on average go up to $80,000 a coin. Now that didn't happen. Why was that wrong, you think? What assumptions were made that were wrong?
Well, I think people used the wrong base number for it. The average cost to mine a Bitcoin prior to the halving was considerably lower. Then if it to have been $80,000, it would mean that the average cost of mining Bitcoin would have had to have been around $40,000, and that wasn't the case, right? It was considerably lower than that. So I think most people's mining costs were in the high teens to low 20s. So you effectively double that, and now you're talking about the average cost to mine a Bitcoin is somewhere in the just nearing the 30,000 upwards to about 40,000, depending on the miner, the quality of machines, price of electricity, et cetera.
Finally, can you give us an update on your longer term plans for Marathon Digital? You just purchased $100 million worth of Bitcoin. What's next in terms of strategic either purchases, acquisitions, or expansions?
Well, I think you're going to continue to see expansion amongst the top miners. Obviously, Riot and CleanSpark are very active on the M&A front. We were very active on the M&A front in Q1. You'll see us remain acquisitive over time here. As we see interesting opportunities, but we're also driving organic growth. We're going to double our size from a hash rate perspective this year over last year. By the end of this year, we're also continuing to grow our technology business and our technology stack, launching products specifically to go into data centers that not only mine Bitcoin, but also that also operate for AI. And you're going to see our energy harvesting business begin to launch more and more pilots like the one we just did in Finland, where we're heating 11,000 homes with the heat from our data centers, which essentially means instead of somebody paying for electricity to heat homes, they pay us to heat homes at a lower cost. And oh, by the way, we happen to mine Bitcoin as a way of doing it. And you're going to see more and more applications where Bitcoin is simply a vehicle to an end that allow miners to lower their costs because now somebody else essentially is subsidizing the electricity cost because the miner is delivering a service called heat.
Okay, very good. Fred, I appreciate you coming on the show while you're at a conference. Thanks very much. Where can we learn more about you and follow Marathon Digital?
Well, you can, Marathon is, the website is mara.com, MARA.com. And you can find me on Twitter at FGTHIEL.
We'll speak again soon. Thank you.
Okay, thank you.